India, if you would have invested 10,000 rupees in 2022, that stock of Bajaj Finance would be worth 1.6 crore rupees. That's an eye-popping 1,50,000% return. Now, that might sound amazing, but if you think about Google, Facebook, and even Netflix, Bajaj Finance killed all of them. It did better than all those three stocks together. Also, it's the largest NBFC in the country with what? 3.9 lakh crore rupees. Now, the business is amazing and a lot of investors have made crazy amounts of money on the way up. But the real question now is, will Bajaj Finance continue to grow like it has in the past? Or do we see some cracks? In this video, we're going to talk about the cracks that we see in Bajaj Finance, and you tell me, do you think the future is as bleak or as bright? Now, before we dive deeper into the business, let's understand what Bajaj Finance is, and let's start with the history. So, Bajaj Finance is part of the Bajaj Group. We'll understand the holdings in just a bit. But back then, Bajaj was trying to sell scooters. I'm sure you know someone who's driven one of these scooters. It was what made India mobile. Now, people could be dropped to school, dhanda ho sakta tha. The Bajaj Chetak was one of the ways India actually started growing and capitalism evolved. Now, because it was not affordable, 15 to 20,000 was the cost of a Bajaj Chetak or any of these scooters back then, which was a lot of money because salary itni hoti nahi thi. So to solve this and to increase its market penetration, what Bajaj did is have Bajaj Auto Finance. And it did exactly that. Aapko scooter chahiye? Go to Bajaj Auto Finance, take a loan and own your two-wheeler. The company also offered loans to other two-wheelers, rickshaws and scooters as well. But then things changed. They wanted to expand the finance business and move beyond just these things. So they started offering loans to SMEs, and the finance business now started picking up. Finance became one of the ways Bajaj as a company or as a conglomerate was expanding into banking. Then in 1991, India changed. India was opening itself up to the entire world. We call this liberalization, which meant a foreign investor could invest, which resulted in more competition. And because of that, we had better services, better quality, because that's what competition does. This is when all different brands came to India and there was a surge. Hiring also happened, so the average salaries of people also went up. This means India's economy spurred. You can even see this in the stock market because businesses boomed. You can see it in GDP. You can see it everywhere. In 1995, that's when Bajaj Finance decided to go IPO, and they did. This was when they listed on the stock exchange. Business was booming and so was the Indian economy. Then in 1998, Bajaj Finance found its moat. It saw that the average Indian consumer now became aspirational. This is when the middle class was forming. Inko fridge chahiye, cooler chahiye, they want to ride in a new motorcycle, they even want a car. So now they not only want a job and security, they also want a better life. And because of this, there was a gap between how much they're earning and what they want. And this gap is where Bajaj Finance sat. They said, if someone wants to buy a consumer durable, they can finance it through Bajaj Finance. And this is interesting because a consumer durable is something the Aam Aadmi buys but uses for a long period of time. So FMCG is another type of consumer play, but it finishes very quickly, right? Like a biscuit or say fruit juice, etc. You eat it, drink it once and it's over. But when you buy a fridge or a television, you use it for years on end. And you know Indians, right? If they buy a fridge, uska plastic bhi nahi utarte. They take very good care of it. So they knew that people find long-term value in these electronic or mechanical items. So Bajaj said, we will finance it. But what's interesting is that the banks back then thought this is a very risky proposition and that they will not finance it. So they became the only players in this niche to actually offer financing. So now let's talk about growth. In 2006, the asset under management for this company was 1,000 crores. Now that's a lot of money, but Going from 2006 all the way to 2022 is the actual story. So you can see the AUM from 2006 all the way to 2022 is 2 lakh crores ka journey. And it's beautiful, right? You can see how gracefully it's interestingly moved up. And of course, the stock prices also reflected that. We can also see that it's not only a game of AUM going up, because in many cases top line may go up but nothing happens to the bottom line, startups. But we can see that Bajaj Finance ka growth in income and net profit has also reflected. You can see in 2006, that's what the income was. And then in 2022, that's what the net profit is. This is apples to apples comparison of income and net profit. Staggering growth, right? And yet again, this has reflected in the stock price. Now, one thing you need to think about over here is investors are always paying for G, which is growth. That's why you pay a multiple premium over what the company is probably worth today, because there is growth happening. And that's why stock prices move up. It's sort of like hope of the future based on data you have today. So as soon as G vanishes, the story kind of changes. Now, I'm not saying G has vanished, but keep this at the back of your mind as I tell you this story. Now, one interesting thing happened in 2008. Bajaj Auto demerged into 3 separate entities. And I want to show you what that structure actually looks like so you can understand how the business works. So, Basant. So, we have Bajaj Holdings Investment. This is run by their father. Then we have Bajaj Finserv and then Bajaj Auto. Now these, the father obviously had 2 sons. They both run these companies separately. Now what's interesting is that this is listed, and so is this one listed. The others are not. So as you can see, Bajaj Finance is actually pretty wide. It has a lot of businesses under it. Bajaj Auto, you already know what it is. It's interesting that apart from finance, they have all these other businesses as well that you can see over here. Anyway, let's get back to Bajaj Finance, what we are actually talking about today. So in Bajaj Finance, the main reason they grew is because of consumer durables. So whenever you go to say a Croma or a Reliance shop or anywhere else, you can actually buy a product by paying a small down payment and with 0% interest, take that product home. It was probably the OG in buy now, pay later, and 0% EMI. So people thought loan le lo, interest hi nahi hai. But how does this magic happen? If they're not charging the customer, how does Bajaj Finance actually make money? It's pretty simple. So let's suppose we want to buy a television. Let's see how this will actually work. Suppose that an entire TV, this is the cost of the TV, is 60,000 rupees. Now first the buyer will say, okay, I'll pay 1/3 or itna amount, that is 20,000 as down payment. Down payment. The rest of this is converted into an 8-month EMI. Now what Bajaj will do, they'll first charge a 1% processing fee. Now 1% seems like a very small amount, right? But it's actually completely fine. Here is where a second magic happens. They also charge the manufacturer of the TV 5%. Now they basically buy this 60,000 rupee TV for 5% less, and that is its margin. Now that's equal to about 3,000. Now the question is, why does the manufacturer agree to give a 5% discount to Bajaj? So I as the consumer will still buy for 60,000. I only paid a 1% processing fee which goes to Bajaj, but I'm paying full 60,000 rupees. I don't even know that Bajaj was involved in this entire transaction, has taken a 5% discount and kept it for itself. Why will a Samsung or a Sony give 5% to Bajaj? Well, it's very simple. Bajaj Finance is a sales enabler. Now people can come, they can touch and feel the TV, they can like it, they love the stereo, etc. But if they can't afford it, it creates a lot of friction, right? But when Bajaj Finance says 0% EMI, just pay some down, everything else you take, no interest, the user says, okay, I'll just go ahead and buy it. And that's where the magic lies. That's how Bajaj makes all of its money. It takes 5% from the manufacturer and a 1% processing fee from the buyer. Now for such a model to work, you actually need another magic, and that magic is called distribution. There are 1,40,000 retail stores of Bajaj Finance. But something's wrong here. I've never seen a retail store with Bajaj Finance ever. Have you? I haven't. Well, actually, they don't own these stores. What they basically do, if there's a small shop, they go and sit there, signage, mobile phone, Bajaj Finance ka dhanda khul gaya. Because as soon as you have a store which is selling a consumer durable, you will have customers, they will provide the finance. So nice, asset light. And now that you have the internet, you can do credit check and all of that online, and you can enable that sales. Cool, right? That's why they have such great distribution, not only in cities, but also in rural lending branches. So this is another moat that Bajaj Finance has, which is why it can penetrate throughout India. So we've talked about all the good things, and this video, if you remember, is talking about the threats that this business actually has. You can see over here on this screener that Bajaj Finance ka growth is actually slowing down. Now, based on this, do you decide to sell the stock? Do you own it? Do you buy more? You can't look at news and decide what to buy, right? So you have to have a framework, and if you join something called LearnApp Prime, you have to go and apply. If you get selected, you can learn how trading and investing works completely free. But not everyone gets accepted. So if you ever thought you'd like to do analysis like this in a quantitative way, probably that's a great place to start. If you go to the descriptions, you can go and apply. All the best. But let's move on to Bajaj Finance threat. The first thing that is most obvious is the market share. Now, there are three things happening over here. One, there is ICICI, HDFC Bank, which have ventured into consumer durables, which means they will do the same things Bajaj Finance is doing and will compete. This could be special offers, using their existing distribution, etc. So that's eating into their market share. Then we have Poonawalla FinCorp, which is actually Magma Finance, bought by billionaire Adar Poonawalla to take over this company. They are also competing in the consumer durable space. So you have one large player who also has money to figure out and try to eat into the market share. Finally, we have Shriram Finance, really popular in the south. They have merged to create the largest retail NBFC with an AUM of 1.7 lakh crore. So we can't say these guys are new. They all have backing, they have brand, they also have distribution. So I think the interesting thing is once there is a good profitable business and there is a moat, the moat simply starts vanishing because other people try to emulate that moat. And what happens is that only a few players usually can emulate that moat because it has stuff like distribution and AUM, etc. And only a few players can do it. Here it seems like a lot of players are trying to enter. But ज्ञानबाजी बहुत हो गया. Does all of this actually translate into the numbers of Bajaj Finance? Is its market share actually being eaten? So you can see here that from 2006 to 19, and we have another comparison of 2020 to 2022. So 2 time periods, and we'll compare AUM, income, and net profit. So from 2006 to 19, the AUM grew 36%. This is 36% CAGR. It's an average of the years. From 2020 to 2022, it's only 19%. Income, 41% versus 19%, also a drop. This is almost half. And the net profit is also 43% to 20%, also half. There can be another reason to this also. Apart from market share being eaten, it can also be that Bajaj Finance is really large. So having the previous growth rates is just unsustainable for a very, very large company. But you can see it in the numbers that growth has actually slowed down. Another bigger threat, and I thought I'll say this in the end, is Reliance Industries. यार हर वीडियो में कहीं ना कहीं Reliance आ जाता है. I'm not doing this on purpose because Reliance is trying to enter every business. If you think so too, put it in the comments. I'd love to know what you think. This time it's called Jio Financial Services. And like you guys know, they have the brand, the money, and the distribution to hit most businesses. And looks like they're also going after consumer durables again. Finally, I can see that Macquarie report says that Jio Financial Services could emerge as the 5th largest financial company in the country. But anyway, you tell me what you think. 1, about market share being eaten. 2, do you also think that growth of Bajaj Finance has slowed down or not? Put it in the comments below. So Bajaj is doing a couple of countermeasures to actually keep up with the times. One is that they've gone digital really well. It's not just an app that a bunch of people use. It has 31 million users. They even have peer-to-peer lending, which I always thought never made sense, but since the RBI created some framework around it, it may have a future in the country. We can also see that it also has growing deposits. So retail as well as HNIs and other people can invest in their deposits. This means for lending business, when you have cash at hand, it changes everything, and make sure that their liquidity ratios are much better than their smaller peers. And you can see that it has 43,000 crores as deposits, and it's a 41% growth year on year, which is pretty high. And you can see because of the growth and the money, the way it manages its cash, it actually has a good PE ratio. So PE ratio, as you guys know, is the premium you're paying on the earnings that the company has. It's a multiple of future growth. So the higher the PE means higher investors think the growth is possible. So you can see here we have all the peers. Notice the PE ratio. The lowest here is Shriram, and the highest here is Bajaj, which is at 55. Now the question is, if investors think that the growth is in question and will slow down, so there will be a re-rating of this PE from 55 to a lower number. Could be 30, could be some other number. That's a 30% loss in price right there. Another thing could happen, if Shriram Finance does really well and wahan pe growth numbers are very nice, a re-rating could happen there as well. So that 18 could become, say, a 35. So that will change price significantly of that company. Now you need to tell me, what do you think based on everything we discussed today? What could that re-rating be? Please put it in at least 2 or 3 lines in the comments below. I'd love to understand what you all think. But we think, looking at all this information, it's still a great business, but that growth factor is actually reduced. It will not possibly give the same returns it's given over the last few years. So if you look at Bajaj Finance and say it went up so much percent in the past, it's not likely to continue in that same trajectory. So let me know what you think. I hope you like this analysis. A lot goes into making something like this. Someone writes, there is research, there's debate. We put in a lot of effort, even in stuff like production, and a lot of heart and love. And we think anything complex can be broken down if it's presented beautifully in a structure and hopefully adding a little pop culture to it as well. If you think we're doing a good job, please say something nice in the comments. It really encourages us. The number of views doesn't, because we don't know what you're saying. And I hope you found this interesting. I'll see you in the next video.